Yeah, that's fine.
Stairs are
Very brief.
This one? No, that way.
It's a bit cold. It feels cold. People work is coming.
We'd lost you. I thought we'd lost you.
So good afternoon, everybody. Welcome to this panel session. I'm very conscious that we only have 40 minutes to get through what I'm expecting to be an excellent panel session and discussion. We have 8 speakers on the panel today. My name is Veronica Bolton-Smith. I'm the team leader for a program, an FCDO program called the Ghana Jobs for Economic Transformation Program. Palladium are the people delivering that program in Ghana, and I've been working in the Africa trade and investment space for 19 years. And so with that said, I'd just like to introduce the panelists. We have Elise Donovan, Chief Executive Officer of BVI Finance, who's our moderator today, Daniel Ngumi, Managing Partner, Anajawala Nkana, Agnes Gitau, Partner at GBS Africa, Kenneth Mohammed, CFO and Senior Advisor at Intelligence Sanctuary, Matthew Gilbert, Partner at Maples Group, Stanley Osiedi, Group CEO, Africa Investment Gateway Group, and Jeffrey Kirk, Managing Partner, Appleby, and Wairimu Karanja, Chief Legal Officer and Partner at Persistent Energy Capital, LLC. Our moderator today, as I say, is from BVI Finance. I'll hand over to you, Elise, to continue. We will take maybe 1 or 2 questions at the end, but please keep it brief. Over to you, Elise. Thank you.
Thank you so much. Pleased to be here at this exciting Africa Investment Conference. You know, this is, I don't know how many years we've been at AFSIC, and it's always been a wonderful opportunity. As she said, I'm Elise Donovan, the CEO of BVI Finance, which is the marketing and promotional agency for the BVI's financial services industry. We specialize in promoting and facilitating cross-border trade and investment. Today's panel will be looking at international finance, leveraging international finance centers for investment flows into Africa. We have a very esteemed panel of speakers. They're all from different parts of the continent and from the globe, and they're going to be sharing with us their expertise on how we can leverage international finance centers for investment flows into the continent. I am going to ask them each to just very briefly say who they are and where they're from, and I'll start with you, Jeff.
Thank you. Thanks, Elise. Good day, everybody. My name is Jeff Kirk. I'm managing partner of Appleby BVI. Appleby is a global IFC law firm, fiduciary services providers. We're in the British Virgin Islands, Cayman, Bermuda, Channel Islands, Isle of Man, Mauritius, Seychelles, etc. I also act as a director on BVI Finance. Thank you.
Good afternoon, everyone. My name is Daniel Ngomi, managing partner of Anjawala & Kana, ALN Kenya. ALN is a leading alliance of law firms. We're in 16 countries in Africa, and we do all sorts of legal work across the African continent. I personally am a tax lawyer, and I lead up the tax practice.
Hello, everyone. Wairimo Karanja. I'm a partner and chief legal officer at Persistent Energy Capital, LLC. And we are a climate venture builder. We invest our human capital and also financial capital in climate positive startups on the African continent.
Good afternoon, everyone. My name is Agnes Gital. I work for GPS Africa. We're an advisory services firm that provides market entry advisory for businesses looking to set up in the continent. I also sit on the board of the East Africa Association. This is an industry body that represents international businesses working in the Eastern African region. Thank you.
Matthew Gilbert. I'm a partner in the London office at Maples. We're an international law firm with offices in the key IFCs globally.
Stanley Suye. I'm the Group CEO for African Investment Gateway Group. I also sit on the board of Green Renewable Energy Group, and I'm at First Station Africa. Happy to be here.
Thank you. Kenneth Mohammed. I am the CFO at Intelligence Sanctuary, a company that does fraud investigations, due diligence work, etc. I also write for the Global Development Department for The Guardian. Thank you.
Thank you very much. As you can see, we have a very esteemed and distinguished panel of speakers. We're going to start with giving an overview. What are the investment flows in Africa? What is happening in the continent? Agnes, can you tell us?
Thank you very much, Elise. I know throughout this morning you've been hearing about opportunities in the continent, but I want to just give you a bit of context. The continent at the moment, looking at the global uncertainty, we are facing a lot of challenges, and one of those obviously is unsustainable debt, rising inflation, and that's a story for everyone, and high cost of energy and high rates of unemployment. One of the biggest challenges for the continent is access to finance. I think we all know how difficult it is to access developmental finance. Our big of the West are busy prioritizing their money in their own economy, so therefore African continent faces challenges in raising capital. And so it is very important for us to find innovative and creative ways of channeling investment flows in the continent. And one of those is, and hence this conversation today, is how IFCs can help or support investment flows in the continent. I come to what are the trends. Economic growth, I don't know, most of you, I'm sure you've read, economic growth for the continent, the outlook is about 3.3%, and that's not good. FDI investment into the region, according to UNCTAD report, was about 83 billion. This is only 5% of the global FDI. So certainly opportunities, but a bit of sluggishness in terms of what we are able to attract. Opportunities, and I guess, Sandy, you focus that more on that. Opportunities are in the key sectors, infrastructure, development, certainly healthcare after the pandemic. Opportunities, most importantly, in fintech, and I think that's the only sector that is attracting huge investment in the continent. But there is always something for you, if you're interested in the continent, for you to do and to invest your money in, particularly in job-creating sectors.
Stanley, what are the trends? What are the opportunities?
Okay, so as a Nigerian, I'm going to use Nigeria obviously as an example. So 20 million housing deficit in Nigeria, those are opportunities. The average Nigerian will enjoy probably 4 to 6 hours of electricity a day. That's an opportunity if you work in the green renewable energy sector. Fintech is a great opportunity. With the cross-border payment system across Africa, Africa is open now for business, for people, countries to trade with each other. We're negotiating a deal at the moment with Alibaba for cross-country, cross-border platform payment at the moment, including with the CBN. Those are great opportunities. But the biggest opportunity I see for Africa in the next 5 years is the green renewable energy. And waste management as well is a great opportunity. There's a new saying now, waste is cash. You see, when you think about throwing things out, that could be turned into cash for many, many communities in Africa. There's an opportunity there as well. So when you look at Africa, Nigeria, again, 200 million people. They need to eat, they need to feed, they need to send their children to schools. Those are opportunities that are waiting for somebody to take advantage of those. So as much as there are challenges in the continent, the opportunities are vast across the continent of Africa.
Okay, so we've heard about the opportunities, and we've heard that international finance centers can help facilitate some of those opportunities. Jeffrey and Matthew, can you talk about how international finance centers, IFCs, can facilitate the opportunities that Agnes and Stanley spoke about?
Sure, happy to do so. IFCs, international financial centers, we're talking about business trade centers around the world. At a macro level, they're crucial for global trade. If anything, we've seen global trade and global economic growth blossom because of IFCs, not in spite of them, as some people would say. There was a study done in 2019 by the Overseas Development Institute, a well-renowned independent think tank, and they looked specifically at how IFCs facilitate financing into developing countries across the board, but they did focus specifically on BVI and Mauritius as well. And what they found is over the period from 2007 to 2014, IFCs facilitated 1.6 trillion in financing and predominantly into developmental projects. And of that 1.6 trillion, it resulted in an increase of GDP to those developing states of approximately $400 billion. And of that $400 billion, there were tax income to the governments of those developing states of about $100 billion, which in turn, to a large extent, was spent on infrastructure and developmental purposes within those developing states. So really key evidence of a crucial benefit that IFCs provide internationally. And if anything, I mean, we're seeing the growth of IFCs. States recognize their importance. They recognize their importance in developing their economies. We've seen this morning, Kigali International Financial Center. We've seen the growth of more international financial centers around the world. IFCs are also, they have their own specific niche expertises and areas in which we see them more. Bermuda is an insurance reinsurance jurisdiction. BVI has been heavily used by Asian clients, Chinese clients over the decades as a holding company and in corporations jurisdiction. We see the Cayman Islands with investment funds. Mauritius, obviously, is the key IFC of investment into Africa. So really, a lot of them each have their own niches and their own areas of expertise that are crucial to the global economy.
And they're complementary, of course.
And complementary, yes.
Matthew?
Yeah, I think if you look at the life cycle of an investment, cross-border, particularly if we're looking at developing country opportunities, like Stanley and Agnes have touched on, are going to be appealing to investors, but whatever the nature of the investors, whether we're looking at sovereign wealth, private funds, family offices, or a development finance institution, they're going to need to be comfortable that they're mitigating their risk into these, into these opportunities, which are are likely to be in, jurisdictions with unfamiliar legal systems, potentially political risk, and investors, internationally are going to have concerns as to ultimately what the return on their investment is going to be. Using these IFCs, in the way Jeff has outlined, will allow investors and those that need to sell the investment to the ultimate investors, need to control that element of the risk. They can use jurisdictions that have got familiar corporate laws, familiar insolvency laws, familiar legal systems. Sort of things go wrong, they've got recourse to arbitration or commercial courts with independent judges, who are essentially going to uphold the rule of law, privity of contract, so the parties going into investment can know, the nature of the agreement, the rights they've negotiated are going to be upheld through investment into the underlying opportunities via the IFCs in familiar jurisdictions. Add to that the need for tax neutrality, which I'm sure we'll touch on later, but essentially is about avoiding double tax rather than avoiding tax. So all investors, whether they're coming from different regions, different markets, are going to be treated equally at the level of their investment into the IFC structure. So ultimately, it's about the reliability of the structure, efficiency, and mitigating the risk so that the return on the investment is within at least the parameters that the investors are looking at.
Daniel, going in with investments, there are going to be a lot of regulatory requirements that investors are going to have to adhere to. Can you talk about some of those regulatory requirements and how those can be harmonized for investors?
Sure. So whenever you're thinking about investing into African countries, we often find that due diligence is a key part. And the due diligence that needs to be done in respect of the specific sector that you're getting into. So for example, if you're thinking about investing into telecoms, you need to be very clear in terms of what are the regulatory requirements. Some of them are in terms of complying from the licensing perspective. Others have to do with the maximum shareholding, directorships on the boards, and they need to have done a thorough due diligence on that is quite important. And that cuts across a lot of sectors: financial sector, telecoms I mentioned, banking and regulatory, those type of businesses. The second thing that often you need to think about quite carefully is about the tax structuring. And the reason why it's important to think about it is because in most African countries, there is some form of tax friction on coming in and exiting out of the company. So it would often be some form of stamp duty by virtue of the fact that you're transferring shares or equity, and sometimes there's a capital gains tax. Now, if you structure through an IFC, and the transaction and the investors are coming in through the IFC, you can mitigate some of that tax friction. So we increasingly are finding people who would say that I ultimately want to invest into a Kenyan, a Ugandan, a Tanzanian business, but I'd rather do that through BVI or a BVI entity that owns a Mauritius entity, because the transfers and the sort of in-out of the shareholders will be at the international level, not at the country level where there's less friction. So then tax plays a key role in terms of how you structure your shareholding, and thinking quite carefully about that. The second thing that you also have to think about is obviously the access to double tax treaties. Most African countries have some form of withholding tax that applies on dividends that are paid from in-country to the country where the investors are sitting. There's some form of withholding tax on interest on debt. So again, thinking quite carefully, is there a double tax treaty that can mitigate or alleviate the impact of the tax? And also capital gains tax in certain instances. Some DTAs have provisions that will then shield you from paying CGT on an exit. So the holistic need for you to think quite carefully as to which, setting up in an IFC, but also specifically, are there double tax treaties that they can benefit from? and also thinking quite carefully in respect of how do I structure my group? Where do I place where do my investors invest in? Often you'll find that is going to be an IFC, simply because of the fact that you will shield yourself from some of these taxes.
Okay, thank you. Also, there's a lot of talk about environmental social governance in terms of doing any type of investment. Can you tell us about ESG and why is it such a hot topic on the continent?
Yeah, sure. Environmental, social, and governance has become a key investor consideration and a risk to consider either as an investor or as an investee when you want to attract investors. And of course, for a lot of coming from African countries, there are ESG, environmental, social, and governance laws, but of course, not an ESG law in itself. And the consideration for investors, because you are going to report to your development finance institution, certainly us as persistent as impact investors, we look at that also because of our reporting and the fact that we are keen on the climate impact that we have. And what we're going to look out for in international financial centers and what we see working very well is the ESG guidelines that are available, the kind of information is there about the ESG laws and how investee companies can comply with environmental, social, and governance. And I'll give an example of Kenya, where I'm from, where we do have environmental, social, and governance guidelines by the Nairobi Securities Exchange. We've got governance guidelines by the Capital Markets Authority. So it's a huge consideration, and when an investor coming in, say, a BVI founded fund is coming into, say, Kenya or another East African company, they're going to look at the laws that are in place that work with ESG, be they labor laws, be they environmental laws, be they corporate governance laws under the company's legislation. So having a view on that and guidance on that is going to be very important from the IFC perspective for investors coming in through the IFCs.
Daniel, is there more in terms of the capacity for international finance centers to help build on this ESG that Wairimu has spoken about?
Yeah, so what we're increasingly seeing are regulators who are thinking more and more about the need for enhancing capacity. So Wairimu spoke about the Capital Markets Authority in Kenya, which is developing ESG regulations and guidelines from a corporate governance perspective. But the need for having a whole ecosystem of advisors, bankers, who will give that support. So what we find is that an investor wants to put together a very clear team of advisors very early on. Your lawyers, your accounting advisors. Increasingly in African context, you need to have an expert who will guide you in corporate governance, including meeting the ESG requirements. And that whole ecosystem makes it much easier for you to engage with government where necessary, and also to make your investment as smooth as possible. So in most instances, we're seeing a lot of governments placing a lot of emphasis around this. Places like Kigali, through the KIFC, have actually created an ecosystem where in one shop you can find everyone in one building once KIFC comes in. And we're seeing that beginning to become the trend. So in Kenya's context, we now have the Nairobi International Financial Center, which is also increasingly trying to do the same thing, facilitating the ability of investors to come in directly into the country and finding one-stop shop, your legal, your tax, your accountants, everybody available to help you meet the requirements that you need for your investment. So it's a journey, it's a work in progress, but I can definitely say that where we are today on the African continent is much farther ahead than we were maybe 5 years ago.
Yes, it's an entire ecosystem, and part of the ecosystem is looking at the whole issues of governance. And within the governance issues, there's risk mitigation, there's issues of transparency and anti-corruption. Kenneth, can you tell us more about the considerations for transparency, anti-corruption, and risk mitigation?
Thank you. I think if we look back after the financial crisis, when there was a whole movement towards reform, IFCs were then faced with doing things like enhanced due diligence, looking at beneficial ownership lists, etc. My company in particular was inundated with work with regards to these things, enhanced due diligence, looking at fraud investigations, asset tracing, things like that. Now, corruption, as you know, can be measured by the Corruption Perception Index, which, as it says, is a perception of corruption. And this is one of the things that we have to look at of how these lists affects investment into Africa and my home place in the Caribbean. It's important to take these lists with a pinch of salt because things change quickly. And when you see these lists coming together, for example, the Financial Action Task Force would be the gold standard of money laundering. The OECD, the Organization for Economic Development, is the gold standard for tax evasion and things like that. They publish lists where they rank developing countries. And these lists do affect investments and aid especially. So we have to look at how Africa and the Caribbean really, and I mentioned the Caribbean only because I'm from there, how they can impact on transparency and governance. And we talk about ESG, but governance is such a big thing. We have to use the ecosystem that we've talked about. We have to use our leverage and our influence to directly pressure these weak institutions that create these opportunities for corruption. And in pressuring them, we have to talk about things like ensuring that countries produce lists for beneficial ownership and, for example, politically exposed people, politicians, etc. We have to look at providing protection for whistleblowers, journalists, civil society activists. We also have to look at financing political campaigns and providing lists and proper transparency for these things. And it is an uphill task, especially when some of these countries don't have the resources to do these things. And countries with mineral wealth are particularly vulnerable to some of these issues with corruption. And I've written extensively on the resource curse and how it affects a lot of countries in Africa in terms of corruption and leading to things such as state capture, where big pharma, big oil, etc. have a sort of undue influence over governments and legislation, usually to favor them. We also have to look at where economic activities impact on corruption and fraud. For example, one of the big things with these institutions is the providing opportunities and incentives for when these public servants face the public. So, for example, digitization of these services reduces corruption significantly. And
well, Kenneth, you also talked about where a lot of the money is laundered, and there's a perception often that the money is laundered in developing countries, in the African countries, and you mentioned the Caribbean. Can you tell us about this perception? Is it accurate or is it inaccurate perception?
I think countries have been quite good, both in Africa and the Caribbean, in taking compliance seriously. If you look at the list that the Financial Action Task Force published, and you look at the OECD tax list as well. And now the EU have published their list. Quite contrived, I might say, because when countries come off of the Financial Action Task Force list, they somehow seem to remain on the EU list, even though these countries have been quite proactive in getting themselves off of these lists, working together with these institutions to put compliance and be stronger in compliance and excelling at compliance. We somehow remain on these lists. Especially when you look at the criteria for what the EU called remaining on, and they have several different stages of the list, the grey list, the black list, etc. And I think that we need to be more proactive in this compliance. We can't just look at, okay, we just want to get off the list, etc. We have to be proactive and even try and exceed some of these standards that are set for us. When you look at, let's deal with the elephant in the room. These countries previously, IFCs have been accused of facilitating the flow of illicit funds into the Caribbean and then, washing it clean. But recently, the Pandora Papers, the Paradise Papers, have all exposed exactly where some of these funds are parked. And it's parked right here in London. It's parked in Luxembourg. It's parked in Denmark. When you look at the size of our economies in some of these developing countries, we're small compared to Europe. And you can easily tell how much money laundering goes through some of these countries. Easy. You look at London, where now it has been exposed that all these oligarchs are parking their assets, converting them into mansions and yachts and stocks and shares and even sporting teams. We have to understand that, and we have to push back against some of these listings. We have to push back collectively against some of these things that are affecting trade and investment into our regions.
Okay, thank you so much. Now I want to turn more about how do we synthesize IFCs? How do we leverage all the discussions that we've had so far? We talked about ESG, we talked about the opportunities, we talked about the regulations, we talked about the risk mitigation. So how do we synthesize this into really boosting the investment flows through international finance centers into the continent?
Should I go first?
Yes.
I think there is an opportunity for collaboration and partnership. The more developed IFCs like the BVI, Mauritius, and others, I think there's a great opportunity for them to partner with up-and-coming IFCs in my country, Kenya, Kigali, and others. Also, there is a need for capacity building. Building capacity to ensure that we can work together to attract investment. And I see there is effort amongst African governments to collaborate, particularly under this AFCFTA for cross-border transaction. I think IFCs will play a really important role. So capacity, collaboration, partnership, we can't compete. I think we can compete, but at the same time build each other. I think BVI will benefit by collaborating with IFCs in the continent.
Okay.
Yeah, certainly. I'd agree with that. I think it's important that the IFCs, the established IFCs, don't see this as a competition, but rather work together. The idea is to bring up the economies and the standard of living throughout the world. And we've seen that. Malaysia with Labuan, Cook Islands, Vanuatu, Marshall Islands with shipping, Jersey with trusts and foundations and banking. These jurisdictions sort of work as a mesh together. They do compete to some extent, but the one thing they do is bring up the standard of living across the board.
Mm-hmm. What does in practical terms, we talk about how IFCs facilitate, but can you give me a practical example of what this looks like?
Sure. I mean, and I'll give you an example in terms of the BVI in particular. We'll often see that we'll have investors looking to invest into a project in Africa. The direct route into Africa, well, firstly, let's just say it's a copper mining project in Zambia. Set up a Zambian entity, for the purposes of being the direct operator. That in turn is held by a Mauritius entity, and it has investors from around the world, but there's also an element of financing. The financing, the lender involved says, well, hang on, we want to make sure that our financing investment is secure, that the collateral we take will ensure our interest should there be a default. And often case, we'll then see a BVI company imposed in the structure above the Mauritius entity. Why? Because the lender knows that there's a system of public and private registration of security interests against assets of a BVI company. The lender knows that if you are publicly registering those security interests in the BVI, you have priority of interest. First registered, you have priority. So you know exactly where you stand as a lender. So this gives a great deal of security and comfort to lenders, and by doing that, they facilitated financing where the initial equity investment may be 100 million. You have a financing element that increases that to 500 million.
Stanley, yes.
If I could just add, on Thursday I was in a room full of fund managers. These guys were managing billions of pounds in funds. And you know, there was the hesitation about investing in Africa, but when we eventually gave them the option of working with IFCs to invest in Africa, it was an option they were ready to look at. Before, they would not even think about putting their funds in projects in Africa. But in partnership with IFCs, there's a possibility now. And we need these funds in Africa to do the projects that we're talking about, that we need to do. So IFCs are very crucial in terms of driving investment flows into Africa. We know about the IFCs that are just still developing in Africa. There's no competition, it's about partnership. I know investors that will invest in a fund in BVI, knowing that it's going to end up in Africa, but they will not directly put the money in Africa. You understand? So it's very important that we promote IFCs as a routeway into investment flows in Africa.
Yeah. At least if I may just jump in. Tax is important, but it's not the only thing. And sometimes the mistake that's being done is that people talk too much about tax structuring, when in fact they should be talking about all the other advantages of structuring through BVI and IFCs. For example, and for instance, the simple ability of having a good jurisdiction that's clear from a perspective of dispute resolution. So a lot of instances, people would be very worried as an investor about getting involved in a dispute in country. You don't know the courts, you don't know the judicial system, you don't know the ability of your local partner in influencing the outcome of a dispute. But if it's invested at an IFC level, it's much more clear. Everybody knows what the law says. Everybody knows what the outcome of the law would be. And everybody knows what case law has decided on a particular issue. So just this should be talked about more. I think part of what's lacking on the African continent is an understanding of the other benefits that come from investing through an IFC that are not necessarily tax-driven. And those kind of conversations are really key and important for the continuity use of IFCs as an investment platform for Africa.
And if I may pick up on that, one of the things that IFCs play a key role in that is invisible but very influential is harmonizing of laws in countries, because what you find is IFCs really are proactive and push their agenda when it comes to governments harmonizing laws or changing laws, or having a clear package of, for instance, when it comes to environmental, social, and governance, this is a package of laws that investors should look at. And we'd be looking at IFCs continuing to play that key role, especially now with the information age, having that information available to investors and investee companies as well.
Well, the bell has rung on us, so I'm going to give each of you 2 words on how we move forward. Kenneth.
Of course, my 2 words will have to be compliance and governance. And I would say we have to excel for excellence in those areas.
Stanley?
Deal flows, IFC, investment in Africa. Those 2 words should be coming together so that more investors could look at the option, whereas they weren't looking at that before.
Matthew?
Risk mitigation.
Agnes?
Mine will be collaboration and partnership.
Wairimu?
I'd say existential towards FDI in Africa. That's what IFCs are.
Daniel?
I think they need to continually talk about the benefits and give that investor confidence of investing on the African continent through IFCs.
And Jeff, you have the final word.
I would say recognize the positiveness of IFCs and what they bring, and don't necessarily listen to all the negative shouting that's often directed at them.
Thank you very much to our esteemed panel. If you want to hear more, you can find all of us at the BVI Finance booth, which is upstairs. And so please come and have a discussion with us at BVI Finance booth. This has been a panel discussion on leveraging international finance centers for flows, for investment flows into Africa. Thank you so much for being a part of this discussion.
Thank you.
Thank you very much to our panelists. That was really intriguing and very interesting information shared. We'll soon be welcoming on our next panel, looking at private equity and how to achieve profitable exits in the current economic environment. This will be moderated by Margaret O'Connor from Launch Africa.